Right, good morning, New York traders, non-farm payrolls. Buckle up, it's going to be a very important data set. The Federal Reserve is fixated on data, as is the market. So this could be a high impact scenario for not only today, but will set the scene for the remainder of this month as we lead up towards the Federal Reserve. So let me know as usual in the chat that you can hear me. Please give me a wave and I'll start sharing my screen. Okay, got the dollar here. Right, so as per usual, we'll look at yields, we'll look at the US dollar, essentially the backbone for our watch list. And let me know what pairs you want me to go through as we count down towards the non-farm payrolls that kick off in 45 minutes time. Okay, correct. Right, so let's look at this dollar. Now, if you recall, casting our minds back, let's go to the weekly chart. We have been identifying this as a prospect for a significant pullback. Right, how many weeks are we now? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. We're in the 12th week of higher highs and higher closes. So we are in anticipation of a correction in this dollar. We're at resistance on this weekly chart. So will we be closing in the red today to put the brakes on this trend? Okay, so if anything's going to do it, it will be today's data. In terms of the data, there is consensus of 170,000 new jobs versus the 187,000 that were put in for October. Now, there will also be a focus on the unemployment rate. This is expected to fall a tick down to 3.7%. And also hourly earnings, average hourly earnings, they're expected to remain steady at 4.3% year on year. Now, if we have anything that is in contrary to that, especially with that unemployment rate, then we'd be looking for a significantly lower dollar. So let's go to the daily chart and see where we're at. We've got this trend to the downside, this channel that's fast approaching the trend line support. So a test of that trend line support could be on the cards if we manage to get below 105.95. So we're tinkering on the edge of a break below that as we head towards this data. Still plenty of time to go. Nevertheless, we are coming into that low, which is a structural point. So if we break that, let's go down to the 15-minute chart to look into this. So if we break that and hold below, then that is certainly carving out the path towards that 105.65 support area. Okay, so we're taking on initial support and we're on the cups of moving towards that lower supporting area, which will be critical when we come to look at gold and the other dollar crosses and also the indices in the stocks. So again, let me know if there's anything you want me in particular to go through. We're looking at yields now, so we're moving over to the 10-year yield, and we'll start a fresh chart. What are we doing here? It looks like we're locking in these highs. So this is the hourly chart that we're looking at here. Strong bullish trend. This over here was a breakout. So we broke out of that structure. We've come back in to retest it, and it's held as resistance. So while below there, the attention is on the downside for a test of this low here as the key support. If that goes, then we can say sayonara to the dollar, because if that breaks, we have plenty of space all the way back into here to the gap, and that would weigh significantly on the US dollar. So let's highlight that gap space. Okay, so those are the key levels, and we'll just put in a resistance mark at that structural point there that we broke on the way out of that range. Okay, so I think we're covered dollar and yields here. So there is a bearish slant technically, and if the data fundamentally confirms the downside, then we can be looking to that trend line support as a target and moving across to such currencies as you've asked for, cable. So we'll look at that. Right, cable. I was looking at this earlier. So we've got the peak formation from Friday, and then we have our peak formations for this week, Wednesday and Thursday. Okay, so this is an uptrend, and we're heading into last Friday's peak formation highs. We've got resistance at 122.20, a nice round number, quarter level. So we've come into that dynamic support, and we're moving up into test that resistance. So I would say at this juncture, we are bid while above. So the bias is bullish while above 121. Let's call it 121.90. We can be looking for that resistance area through 122.20. Now, if the dollar were to firm and if the data were to surprise to the upside, then a break below that 121.90 opens risk to 121.64. And then below there, we'll be looking at 121.07. And then we're back into, what are we, Tuesday's highs as a supporting area. Okay, you're not seeing the charts, Gil. Red, did you see sterling dollar? And you can't see the screen either. Okay, right. What I'll do is I'll come out and I'll come back in. Right, bear with me. Okay, how's that looking now? How's that looking now? Let me know you can see the screen. Okay, right, that worked. And Gil, you can see the screen? Perfect. Okay. So, would you like me to go back over anything in particular? We've done the dollar, and you can't see the screen yet, Gil. Gil, could you try leaving the meeting and coming back in? That could fix it. So we've covered the dollar. So I'm looking for the data to confirm my downside thesis for the US dollar as well as the yields. All right, and then we're looking at cable here. We've marked off those levels: 122.20 on the upside, 121.92 and 63 on the downside, which are guarding space all the way in to test 121 the figure, or 121.07 just ahead of the figure. Okay. Right, so let's get into the pairs you want me to look at. We can look at the US 30 and NAS. US 30. All right, where are we placed with the US 30? We want to be buying low, right? So if we're going to get a sell off in the dollar, that would, so if the data were to come in line or miss expectations, then we're looking for the stock market to rally. And what I'd be looking at, I'd be looking at the US 30, NAS, and the S&P. And I want to see out of those three, which is the lowest within the day's range. So the US 30 is high up on the day. The NAS is tucked in towards the origin of that rally. So it's actually giving us a discount. So for me, NAS is looking more attractive than the US 30 at the moment, and the S&P. So the S&P and NAS are essentially, well, they're highly correlated here. Um, I'm looking for the most favorable structure. See, this is an inverse head and shoulders, which is bullish. So I'd keep an eye on all three. And when the data comes out, we're going to see volatility. And then we're going to be looking to see if that volatility starts to die down and sets us up for a buy low of the session, so the New York session opportunity. If, on the other hand, the data comes out the wrong way for us, I say the wrong way because we're looking at a dollar short scenario. We're looking for that dollar to continue to slide. That's the easiest trade, and then we counter that on the stocks. So if the dollar gives us that sell-off, I'll be looking for a setup as low as possible within the day's range on the stocks. Okay, so we can look at the 3-day cycle template, and let's just clean up the chart entirely, start fresh. So as you can see, we are one, two. Okay, so we're squeezing the shorts for the week, and we're heading back towards the breakout point. Okay, on the US 30, the breakout point being last week's lows, right? So, as we've talked about before, the majority of breakouts fail. Markets only do one of three things. So, we've broken out, we've pulled back, and the question is whether that's a failed breakout or if we move sideways or it's a pullback to continue going south. So if we get this reversal in the dollar that we've been looking for a number of weeks, then we can look at this as being a failed breakout of last week's range, and there'll be prospects of a move up into that range, the origin of which came from the 22nd of September. Okay, so right up here. So let's see how things pan out. That's where we are with the stocks. Right, any other pairs, guys? Yep, there's a number of events coming up. So what stand out to me are going to be the Canadian unemployment rate, non-farm payrolls. We've got the New York Open at 9:30 New York, and then later on in the day we'll have Fed member Waller speaking. That'll be at 12 p.m. New York. Okay. Any other pairs, guys? We can look at the euro. So the euro is up high on the day. Not sure that we'd want to be getting long of the euro up high. So again, we're looking for value, and we're looking for opportunities to be long as and when the dust settles at the lowest point of the session. And if it doesn't give us that, it doesn't give us that, and we move on. On the flip side, if we break to the downside, then just note that we've got the yesterday's closing price as a support area, which is in and around, well, the day's point of control as well, one spot 0550 ish. So a break below there, we'll have the trend line support, today's lows, and then yesterday's lows as a target over here. On the upside, let's have a look. We'll have to pull the charts back considerably, and right, we need to get through that daily resistance. So there's not much to be said for the upside until that is broken. You've got Monday's, in fact, Monday's high, so 592 ish. Okay. Um, I'll mark that off. Monday's highs. So keep that in mind. Right. Okay. Now, what's interesting here also is the oil price. We've got three pushes out of the opening range for the week. So Monday's low. So we came out of Monday's low on Tuesday. We pumped up into the shorts from Monday. Supply came in again, so we made a fresh low on Wednesday, another low on Thursday. So that is one, two, three pushes out of Monday's initial balance. And therefore, given that we've broken below last month's lows, as most breakouts fail, we can be in anticipation of a pullback. And given the three pushes scenario, we could have a significant move to the upside that will first of all target last month's lows around when it's 83.50, and looking for some stability around there, if not a continuation up to yesterday's highs. So that's the bullish scenario. And then the bearish scenario is a break of the support that it's testing at the moment from a daily perspective. Right, well, doing pretty well at the moment through there. That comes in at 82 spot 13. We're now taking on 82 the figure. We're below there. We've made a low of 81 spot 82. But is this the dump before the pump? So, well, again, data dependent. Now, if we have a continuation to the downside, I'd look to that as a critical support at 80.80. Okay, so 25 minutes until the data. So any other pairs, or shall we wrap it up and it'll be time to start marking up your highs and lows as we head in towards this data? So for instance, looking at the dollar, yeah, we can look at Euro Oz. Euro Oz, Euro Oz. Right, so we are on the front side of this bearish trend. Now, say we're on the front side because we haven't quite broken. Let's have a look here. Right, well, this one's a little bit complex because we've actually got the lowest high point, if you like. So lower high, lower high, lower high, lower low, right? So that is essentially a swing point here. I'd argue that's the swing point, and then we're down to here. So until we break 66.52, call it, depending on your broker, but 66.52, according to this chart, we're still in a technical downtrend. Okay, so, but if we were to break that level, what I'm highlighting now as red, get the thing to work. Now, if we break that level, then technically we're on the backside of that bearish trend, and we can regard it as a counter trend line support. So keeping an eye on that closely. Otherwise, a break of these lows is likely going to be, whoops, wrong one, going to be our cue for looking for the continuation to the downside. And that will become sort of a swing high point. We're looking for a lower low. So we're looking for a strong high here to create a lower low. Unless we break 166.52. All right, so in terms of the downside targets, I'd look for stops below this level here as a pool of liquidity for the price to be drawn to. So that comes in just below 162, call it 162.50. You are welcome. Right, any questions with regards to non-farm payrolls or anything at all? Otherwise, we'll wrap it up. I'll post the video and we can roll up our sleeves and get ready for this data. So your chart is still loading. I'm speaking to Galua. Could you explain what you're seeing then instead of the chart? What I'll do is I'll reshare my chart and see if that works. It seemed to work for others. So let's just test that out. So that's it shared again. Could you let me know if you see it now? Galua, por favor. Well, the dollar, Ren, um, I've been looking for a pullback for many weeks, but um, I would say that this data could be definitive with that in that regard. Uh, as I said at the start of the meeting, the Fed is data dependent, and so are we. So we need to get confirmation from this data as to the sentiment surrounding the Fed, the Federal Reserve. Higher for longer is the narrative, but how much higher? So this data will be imperative in that respect, and likely set the scene for the next couple of weeks. But if you look at the weekly chart, then it's screaming out correction. We've got this strong wick on the Dixie. Um, so essentially, that's this week's sell off. On the other hand, that also could see the price return to the upside. So um, we could see a fast move up into the 107s um, over the next day or so, if not on the day itself. But we'll have to see how the data comes out. The data is coming out very shortly, 20 minutes, 18 minutes now. I've just covered oil. So oil is three pushes out of the opening range. If support holds, then we're looking for a short squeeze opportunity, given that it's already three pushes out of Monday's initial balance. So that's plenty of shorts that are in the market. Perhaps there's going to be a short squeeze. Okay, guys, so I'm going to wrap it up there and wish you all good luck and see you in the other chat rooms. Want some chocolate? Oh, see, thank you. Orange. Thank you very much. I'm not sure if it